All right, hey, good afternoon, everyone. It's 12:36. I'm shooting this video before the close so you can see exactly what we're doing and what is happening. So here are new crop soybeans, I mean, straight up off the low. You know, this is so Friday, Thursday, Wednesday, Tuesday, Monday, right? This is Monday where we tested $12 and we're up $1.40 from that point, right? So straight up vertical, no even intraday pullbacks really to speak of. We blew up through our cloud. Prices are well above where we were 26 days ago, and our leading edge is gone just straight vertical. So nothing bearish at all on this chart. You know, resistance is not offering up any resistance at all. We're just slicing right through it, which is indicative of a weather market, right? I mean, the weather really has just shifted, and we continue to see rain in the forecast, but that rain keeps getting delayed and delayed and delayed. So the trade is putting a lot of premium in here to until that comes to fruition. And if it does come into fruition and we are wetter, then I would expect all of this premium to come right back out of it. We went through the balance sheets on the yesterday, so you can see kind of what we're looking at. I'm going to click this button here. Here is your open interest indicator. You know, open interest is important to understand what's happening, because as open interest rises, it means that new money is participating in the market, and as open interest declines, it means it's either short covering or long liquidation, right? And so here we have a big rally with declining open interest, which means it's been short covering. And that can be very, very explosive, very powerful to the upside. And the risk that you have is that these forecasts do materialize and they come in wetter and they just rush to put it all back on, and that can give you the pressure back to the upside, and you'll start to see open interest rise again. You'd much rather sell a down move with rising open interest than buy an up move with declining open interest. So a couple things can happen here, and obviously, like we talked yesterday, if we continue to have weather problems and the rain events do not materialize, then 1350 is not the high of the year. You know, we are going significantly higher with a yield under 50 on soybeans, in our opinion, and so we'll just have to stay tuned. Give it lots of room, be very, very patient, and don't try to over trade it, because you're not going to be fast enough to catch it if it does drop. But from a technical standpoint, this does look really good, right? You got a 1, 2, 3. You got bullishness all around. We are overbought on the short-term stuff, so I wouldn't buy it today. But as we start to fade lower, we'll have to make some decisions based on what the weather forecasts are and what's going on at the time. But for today, I would just sit tight and wouldn't do anything with soybeans. Now, corn is a little bit tougher because it's just it's even stronger in our opinion. And what we have here is a really objective shelf now, right? So this 575 to 585 level is a really nice shelf from which to trade. So it's pretty clear this was big resistance as over the last couple of weeks. As we tested back to it, we broke through it. We've now broken out the top side of it, and now that should become support, right? So what was once resistance is now support, and that should hold the market. If it fails to hold it, then I think that's big problems for the corn market, just like the soybean market, okay? Open interest in this market is doing the same as soybeans. It is declining until today. That is the first until yesterday. It's the first indication that we may be attracting new money to this, but overall we've been down into this rally. So technicals don't really matter today, to be honest. As far as being able to sell resistance or buy support or anything else, I really don't think it matters, because the weather is going to drive this market. And if we are going to burn Iowa up, we are coming much, much higher, and we're going to blow the top up off of it. And so there's still lots of opportunities to own it if we need to own it. Otherwise, we're just going to sit tight. We're going to sit here and be patient, and we're going to trade against this pivot point. We'll probably wait and see Monday night what happens. If it's weaker, we're going to sell more. if it's kind of dripping down here and testing it, we'll probably buy it because that'll be a really nice risk reward. But anything above 70, 75, we want to own. Anything below that, we want to be short and be able to put on new sales. Okay, so corn, anybody's guess. Who knows what will happen with the weather over the weekend? If that rain doesn't move and it becomes more and more likely, then lower we come. If it gets drier, or for some reason we think this crop is under more stress, then who knows where corn goes, and you got to have re-ownership on in that case. All right, now wheat is really interesting today because wheat's not impacted here by the weather and stuff, right? I mean, maybe marginally so because of harvest, but really our supply for this year is not being not growing, not shrinking based on weather. And so, yeah, here we are, almost 70 cents off of yesterday's low in Kansas City wheat. And so this is a very, very difficult count to trade from. We're right in the middle of the range. I think the best course of action here is to go with corn. If corn goes higher, wheat's probably coming with it. And if corn goes lower, wheat's probably going with it as well. I don't think wheat is strong enough really to go ignite its own rally, absent some help from Putin or something, because I think we know our weather issues and we know what happens there. Now, it is not unusual for wheat to rally into harvest and then break, so that's not totally surprising, but I would be surprised if it really gained legs unless corn decides it's got to go higher in order to ration demand. But that is not the case as of yet. So grand finale, end of the week, we'll see what happens Monday night. Markets are closed during the day session, so the next trade will be Monday night at 7 o'clock. We will see how it behaves and into Tuesday, and it's anybody's guess just based on the weather forecast. So with that, hope you guys are okay. Hope you're positioned. I think we're pretty happy with where we're at in corn. Long calls, short futures, beans are mostly protected. I wish we'd have put a little more re-ownership on, but then again, that's okay. Most of you are still open on some beans and have some upside. So no harm, no foul, and we'll see what happens next week. All right, lots of risk trading futures and options. You should only do so in light of your own financial condition. And if you have questions, please call us. We're happy to help analyze what is best for you. Hope you guys have a great weekend. We'll talk to you on Monday.